All right, so we mentioned a considerable change of sentiment. We're looking at the futures market. It was higher earlier, now in the red. I want to ask you, what does this mean? 125% tariffs on U.S. goods after the U.S. Bumped up its tariffs on Chinese goods yesterday. What does this all mean for the equity market as investors are really trying to digest this trade war?
Yeah, great question, Frank. And, I think it's just a continuation of the escalation in the trade war between China and the U.S. I think we have seen that tit-for-tat behavior in recent days. And in some ways, it was not surprising that China was going to come back and basically match that the rate that the U.S. had put on or move in that same direction.
Wait, Phil, let me interrupt you. Not surprising. I think it seems like investors are surprised. Aren't you a bit surprised? I mean, this continual, what seems like an escalation and a tit for tat, that's not surprising at all?
I'd say the communication from Chinese officials was that they were not going to back down. We know that, once that sort of, one country increases tariffs, the other one will kind of retaliate. And I think we've seen that behavior. I think the good news in the announcement today was that they said that we're not going to, continue that pattern. And if you look at the magnitude of where tariffs are now, both in terms of what the U.S. has on in terms of tariffs as well as China, it comes close to sort of almost an embargo, on both sides. And so, hopefully, that will make it more likely that, ultimately cooler heads will prevail and perhaps there was going to be some negotiation down the line.
All right, so your embargo comments, they really mirror some of the comments from our Jim Cramer as well. I want to ask you about the bond market. We've seen the bond market get very active, the so-called bond vigilantes. The president seems to be paying attention to that market. His cabinet seems to be paying attention to that market. As I mentioned earlier, bond yields have sharply moved higher over the last week. Are you expecting to see a reaction from the bond market? And then again, how does that impact the equity market?
Look, it's been one of the areas of concern, as you mentioned, this week. I think the bond market not acting defensively in significant moves we've seen on Tuesday and Wednesday in particular. So I think it's going to be a focus. My expectation would be that hopefully we found some sort of equilibrium, but it's certainly been unsettling investors, the fact that long-term treasury bonds as well as the dollar hasn't acted more defensively in recent days here.
All right, let me talk to you about a very influential part of the market. Of course, that's Megacap-Tech. Dan Ives from Wedbush out with a note a short time ago saying, in part, it was a pretty lengthy note with the 145% tariffs now in place. The self-inflicted uncertainty from the China tariffs has turned the corporate capital expenditure world upside down. Do you agree with that take? The idea of CapEx spending for Megacap-Tech pulling back, a lot of people think that could actually lead to a significant decline in the equities and unwind that whole trade. Do you agree with Dan Ives' take here?
I think it's early to tell. We have seen significant CapEx by many of the Max 7 stocks, the kind of AI trade that was really the focus over the past couple of years. So I think it's too early to tell, but I'm sympathetic to the view that if you kind of look at the companies that have been doing the CapEx, whether it's the Amazons, the Apples, the Googles, these are cyclical businesses. And so if there is a downturn in the economy, I think that you can see a knock-on effect. So it's, I think, too soon to tell, but it's certainly an area to watch.
Phil, it's hard to imagine. We haven't really talked about the president yet so far in this conversation. I want to play a soundbite from the president yesterday and get your take. Also want to hear what you think, how you think investors are going to digest this.
There'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing.
So, Phil, transition, that seems to be the word from the president right there. What's your take on that? How do you think the equity market and investors there digest this?
Look, any sort of clarity that the president can provide in terms of, what the end goal is and what that sort of transition looks like, I think will be welcome. And I think we've made a step in the right direction in terms of, the president acknowledging, the impact that the uncertainty had on financial markets earlier in the week, and there was a willingness to kind of pull back. But it's not clear what that transition looks like, and is 10% sort of the floor for all countries? Are there going to be more tariffs in 90 days on top of the 10%? And so I think if there's one lesson I think from recent days is that the financial markets need more clarity, need better forward guidance to be able to digest the trade policy that has been the focus here in recent weeks.